China's top newspaper on Thursday slammed U.S. moves to restrict Iran's oil trade, which could see Chinese banks sanctioned. European Union restrictions have reduced cooperation with Iran in foreign trade, financial services, energy sectors, and technologies, and banned the provision of insurance and reinsurance by insurers in member states to Iran and Iranian-owned companies. On the 23rd of January, 2012, the EU agreed to an oil embargo on Iran, effective from July, and to freeze the assets of Iran's central bank. Iran symbolically preempted the embargo by ceasing sales to Britain and France. Both countries had already almost eliminated their reliance on Iranian oil, and Europe, as a whole, had nearly halved its Iranian imports, though some Iranian politicians called for an immediate sales halt to all EU states, so as to hurt countries like Greece, Spain, and Italy, who were yet to find alternative sources. President Barack Obama, however, worried about his re-election prospects, initially opposed the sanctions legislation. In exchange for Obama endorsing the legislation, its congressional sponsors agreed to allow Obama some discretion to grant exceptions to the restrictions. The decision means banks in the 11 countries have been given a 6-month reprieve from the threat of being cut off from the U.S. financial system under the new sanctions designed to pressure Iran over a nuclear program. Now, United States has exempted Japan and 10 EU nations from financial sanctions because they have significantly cut purchases of Iranian oil, but Iran's top customers China and India remain at risk. However, the waiver provisions simply increase the likelihood that the new sanctions will have little effect. If Obama grants even a limited waiver to Turkey, for example, Japan and South Korea will most likely ask for similar treatment. And India has already said it will restrict oil imports from Iran only in response to United Nations Security Council sanctions, which, of course, neither China nor Russia will permit. So the net effect of the new legislation is likely to be very limited. Officials in Beijing and in Moscow continue to make it clear that they oppose significant new sanctions, especially if such measures might limit China's importation of Iranian oil. While China may not want a nuclear Iran, it doesn't plan to do much to prevent it. The Chinese Premier Wen Jiabao has toured the Arab oil-producing countries, lining up alternative oil sources in case Iran is cut off. On the 15th of March, EU countries decided to instruct the Brussels-based SWIFT financial messaging network to disconnect 25 Iranian banks on an EU blacklist, including the Central Bank of Iran, from its services. The decision followed pressure from the US and became EU law the following day. The action represents a dramatic intensification of EU sanctions on Iran's central bank, which had previously been given exemptions for legitimate, non-oil trade with European companies. The exemptions were officially continued in the new EU legislation, but are largely superseded by the full cut-off of services from the SWIFT system. EU officials were aware of the issue, and it was discussed, but burgeoning pressure from the U.S. Congress to penalize SWIFT unless they cut ties with Iranian banks, and the fact that payments through the central bank for legitimate purposes can still happen, just not through SWIFT, were the deciding factors. The SWIFT disconnection was effected on the 17th of March. India enacted a ban on the export of all items, materials, equipment, goods, and technology that could contribute to Iran's nuclear program. In 2012, the country said it was against expanding its sanctions. India imports 12% of its oil from Iran and cannot do without it, and the country plans to send a huge delegation in the near term to Iran for their bilateral economic ties. The People's Daily, the official newspaper of China's ruling Communist Party, said in a commentary that the US move was misguided and selfish, and China had every right to import oil from Iran. China has become Iran's largest remaining trading partner,